We'll do it live. We'll do it live. Welcome, everybody, to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. We're checking out Pound CAD for a short. The reason we're live so early is because of this. I wanted to get this trade off for everybody. Great British Pound versus Canadian Dollar. Thank you. Thank you. But it's not this one. It is that one. There we go. All right. So essentially, we're doing something that I tell you guys never to do. Never short into support. That's what we're doing. We're shorting into support. There's technical signal right here. You can see momentum is trying to get above the 50 spot on the RSI, failing to do so. Today, you have a humongous downside bearish candle. Now, if we go into the daily time frame, we just had this hourly up, and I was going to take it based off of that candle's low right there, but I didn't want to go ahead and take the trade, then jump on YouTube and be like, oh, sorry. So we're going to put a limit order up there. 1.69370 with a 25 pip stop loss. That gets you up around hourly resistance. That's the Pound CAD. That's literally the only FX setup I see today. So let me do something really quick, as I got to pull up a couple things here. I just went live without being ready at all. I wasn't going to go live until the market opened this morning because got some beautiful, beautiful trades to show you on the options platform, but it is what it is. Let me get this going on over here. Let me get this up here like this. So we'll pull this bad boy over here. And then let me get one more thing pulled up. You guys talk amongst yourselves, please, for a second there. Good morning, everybody. How's everybody doing on this fantastic, beautiful, beautiful Thursday morning? Sorry. Sometimes my days go together because I do the same thing every day. All right, so this trade right here, you can't see the AMD trade, but it was the same thing. Essentially, all I did is I went out and sold the IV. That's not going to be right because they had earnings after hours last night. So this IV, when I took the trade, was up like 180%. So what I'm doing is essentially I'm just going way out of the money, selling a call, making sure that it's outside of its expected move, way outside the expected move, which is $10 in this case. And yeah, that's what I did. So let's go over here and look at the trade tab, pull this baby open. You can see I came all the way out here to the 117, the 117 call. I sold it for 40 cents, which isn't quite 1% of the total account's equity. However, it was a good one. All right, so let me get this up too, because sometimes people just like looking at Thinkorswim. All right. Oh, you shut up. Thank you for that. All right. 1 second. All right. So basically, when you sell a call, it's not necessarily a short position. It is in the sense that I don't want price to get up to 140, but I have, 2-3 days for that to happen. And if as long as it doesn't get up to 140, then I close the trade out profitably. As you can see here, it didn't even come close to 140. Remember, earnings can cause massive spikes. I went back in AMD's time and I looked at every single earnings event to see if it could do a potential 20% move, and it could, all right, because it had done a 20% move two times in the past. So we might have missed this trade, and if we do, it's all right. I'm 3 for 3 on FX trades this week. I'm not really caring, but I did want to get a trade off for the YouTube fam. Yesterday, I did post that trade on Etsy right here. I said close the AMD trade I took yesterday at the end of the stream, which was Tuesday. If you can remember, I got filled on that AMD call. As soon as the market opened yesterday, I closed it out for 100% profit. The new trade today, sell, 2 days to expiration, Etsy, 117 call at 40 cents. And you can see right here, that's where it needs to get. Otherwise, we're going to close this trade out with 100% profit. And yesterday I had earnings, so it is gapping down nicely this morning. ETSY. So it's not, in a sense, a play that you do. I mean, you can do it all the time, but it's just earnings, right? Earnings. And you got to make sure that when you do it, you got the right strike price and everything, because if you do the wrong strike, you're going to get killed. So this is the expected move, right? So on earnings, it could have went up. It could go up. It can blow out the expected move. It can, right? And we all know it can. Let's just go right over here to something I like to call the SPX and pull this up right here. This is the expected move on the SPX right there. So not only did you breach it, you closed under it. So the expected move isn't the all seeing everything, right? You can breach the expected move. So I go out of this strike far enough, where there's still enough premium, at least $40 on the put or call, and then B, just basically just put the trade on and wait. That's literally all I did. And as soon as the market opens today, I am going to close that Etsy trade out, probably 100% profitable. I can't say that it'll be 100% profitable based on the implied volatility, because the VIX is up. What is going on? Why have you stopped? Thank you. No, I said the VIX. All right, so the VIX is up. It's up to $16.79. What is that candle's high right there? 1742. Damn. So the VIX is starting to move, ladies and gentlemen. This is going to get fun. Really, really fun, because the VIX makes the premium more expensive. So yesterday we were up at 16-ish. Today we did gap up a little bit, but we are pulling back a little bit on the VIX. So the trade might not be 100% profitable, but it will be close. If it's not 100% profitable, I'll leave it on till tomorrow, which is non-farm payrolls, and then I'll just close it then. All right. You can't really go by what everything is saying here, because the market is closed. The market's closed, but yeah. So nice stuff. There's a link in the description for tastytrade if you want to start trading options, because the government for the United States is making a trade Bitcoin so difficult. All right. It's very difficult to trade futures on Bitcoin. All right. You can still trade Bitcoin itself on Coinbase, but all you can do is buy or sell it. So you can't like hedge your downside risk, which is the most important thing in investing. All right, so moving forward, we can see the S&P 500 has broken down. We had a nice daily bearish engulfing, and it was a bearish engulfing as it took out the high and the low of the previous candle. That was this day right here. All right, if you pull up the SPX by itself, it opened way up here and then dropped. All right, so that is an engulfing candle. And then we did trade up higher than resistance, so I couldn't tell people to short it just yet, but I did have a feeling it was going to break down. So what I've done here is I've pulled up 3 fantastic levels you could have watched for a short entry. April's high, which is what caused the rejection in the first place. And then yesterday's news just essentially helped the market go to the downside. If you haven't heard, America's been downgraded from AAA to AA plus status. That's what caused the market to crash yesterday. It's not really a crash. It's only down like 1.5%, 1.4%. So not a crash. However, in 2011, when that happened, the market did pull back 20%. 20%. But when they did that back in 2011, the Fed's fund rate was at 0, and all the yields were all where they're supposed to be, right? The 1 month was the cheapest, then the 3 month was a little more expensive, then the 2 year was more expensive than that, then the 5, you get the point, right? The shorter term contracts were more expensive, and the long dated contracts were the shorter dated contracts were less expensive, and the longer dated contracts were more expensive. Now that's what happened during the last time this happened. Now, I'm not saying the world is going to fall or anything like that. I just want to show you this. Sometimes I can get long, sometimes I can't. So yeah, that's July 11th. And then, like I said, if I were to mark a line where all the yield curves were, you could say like right here was the 2-year, and then right here was the 5-year, then the 10-year, then the 20-year, then the 30-year. All right, obviously not like that. They were complete and total lines. However, now they're all inversed. Everything's inversed, right? It all looks like crap, and we're at 5% because they've already started hiking rates. So what are they going to do this time? Last time, they raised interest rates to help it, right? It wasn't much of a raise, but they did raise it. And then ultimately, we gained that AAA status back. But this time, they can't raise interest rates. So it's okay. It's okay. It's all going to be fine. Because why? We can trade this no matter what. Now, we are looking for a breakdown to happen sometime soon. Not necessarily a sell-off and crash because everything out there smells bearish. However, if that does happen, we will trade it that way. But we are looking for a pullback on those very, very, very overbought 7 risk assets. Bitcoin right here, you can see it is holding at the 2021 yearly open. That is the actual level that is holding for now. As you can see back here, it held, you broke out, then you fell back under, then all this garbage, and then down. So one wouldn't necessarily call this support anymore, but you have to because you have not closed the daily under it. So that's the last level that I would look at to be a buyer. But you should have been a seller. If you remember my earlier videos, I was saying watch out for the Heath level right there, the daily Heath level. Obviously it went well above that, but once it got back under it, you could have hit the sell side bid, or hit the sell side, and then you could boom, drop your stop right there, and you would have been fine. Obviously that's in hindsight, but it's the same thing that I say always. If you have an asset that is making lower highs and lower lows, and you're below the 20 on the exponential moving average, you are allowed to sell it, right? Lower lows, lower highs, right? You're allowed to sell it because you are currently in a downtrend. And if we pull this little baby up over here, you can see the yellow is the 21. So yeah, this day closed above it was nothing but a trap. Now we can't say it's a trap until what? Until the low gets taken out. And the lows still hasn't been taken out. So is this a bullish bounce? Is this a bullish retracement? Well, if you want to buy it, 28,990 would be the price. That's this yellow line. All right, that is support. But make sure you control your risk because I don't know that this level will hold. And you can see how far this day penetrated. All right, so to buy it here, one would almost need to put a stop loss all the way down there just to be sure, right? Because if we break down and take this low out, you've made another lower high, lower low sequence. I don't like saying none of this on Bitcoin. Obviously, I hold a tremendous amount of Bitcoin. Tremendous amount. So it is what it is. I like it when it goes up, but it's going down. Now, luckily, I am still able to trade futures on Bitget. If you're not in the USA, there is a link in the description for Bitget. They're a fantastic exchange. They do great fills. And so they're the cheapest out there as far as when you use market orders and stuff like that on fees. But anyways, you can use them if you want. This is the level that I'd be looking to be a buyer at. You got a daily support over here, right? This candle, but yesterday closed under it, right there. I mean, it's a close under. It's just barely a close under, but it is a close under. And then this level right here is the monthly resistance. And you can see what happened today. As soon as the open, boom, it went right up there, tagged that monthly resistance. So let's get rid of that. Let's get rid of that. Let's get rid of that. Let's just leave those two lines up. Come over here to the monthly. It's that candle right there, that monthly res. It's resistance because that was where the close was. This month failed to close above it, and this month did close above it. So it is still resistance. However, when price is under it, it can act as resistance again, right? But sometimes we look for it to act as support if price is above it. However, it has not held. It tried to hold. It tried to hold. when we got this move up, but unfortunately it just hasn't. And this is just a 3-day-old monthly candle, guys. This candle is only 3 days old, and look at the range it's put in already. Very difficult to trade that. And you haven't went into any like legit level yet. Like that's the legit level that I would be expecting it to go to if it wanted to have, you know, a really good pullback. But it hasn't done that yet. So, and I wouldn't expect you to get long and target up there. If you're getting long a part of a day trade or whatnot, this is your target. I mean, that's your maximum target, because that will be resistance. However, I don't suggest you get long. I just don't. Now, this thing could fool me and turn around today, because I don't know what price will do ever, right? I don't know anything what is going to be done in the future. I'm just a price analyst. However, it does not look like it wants to go up to me. The dollar is still just pushing, which is something I wouldn't have expected either. But remember, on the longer, like if you look at the whole chart based on the monthly or something, then this is going to look like a descending wedge, which is a bullish pattern. People expect descending. It's a very broad descending wedge, but it is a descending wedge nonetheless. But people do expect that. That's the move people are going to be looking for right there on this. So, and we'll see if it happens. I don't know how the news, the downgrade would affect the dollar. I don't know what's going on with it. We had a down the sideways projection on the dollar for the year. We're into August now, so my projections are good. When it happens now, I have no clue. But that's your yearly opening range right there. I mean, this is quarterly support. There's so much resistance here. And this thing just trashed right through them. Just like opened the door and came right on in and made itself home. It's crazy what this thing is doing. Crazy. But you haven't tested last month's open yet. Right there. This is going to be the test. Remember, this candle's only 3 days old. So could this candle be just simply making a top for the monthly range? I would say yeah, as long as it stays under that trend line. As long as it stays under that trend line, I would say yeah. But is this a good place to look for a short? Yes. Yeah. Yep. I would take a short there, win, lose, or draw. But the problem is on the daily time frame, it does not meet short time or any short criteria. It just doesn't. It's actually, we would be looking for pullback buys at this point. You're still below the 200 also. So I guess really and truly one shouldn't look for pullback buys when something's in a downtrend, a clear and obvious downtrend. And until you get above the 200, because that could act as resistance as well. I mean, you are trending lower. There's your yearly open, right? That's your yearly low, your yearly high. You made a lower high, you made a lower low. You are trending down. So these things, indicators, they say, no, it's not a short. But I say, until it gets above that, at least this, it's a short. All right. But we have to find that in FX because we can't trade the dollar. And unfortunately, the euro just does not look good to me as a buy. Right. But there we are. There is last month's open. Boom. And then we got ultimate resistance up there, but now this is going to be resistance, because if it's going to make lower highs and lower lows, this will be the resistance. So that's where price would fail. I don't think it would go up there, but price can do whatever it wants. So are we at support? On the monthly we are, but the daily support that we were watching, which was this, failed. And it failed miserably. And like I said, the indicators say that this is a short. However, the short would have had to been taken on this day right here when you tested the Heath level or the supply zone on this bullish day. That's when you should have taken the short trade. So we'll see if the last month's open holds a support or not. But that's all we can do as price analysts. But the indicators say that on the daily, this is a sell. So we'll see. We'll see how it plays out in time. Obviously, we haven't gotten filled on pound CAD. Unfortunately, that was an obvious trade. I'm so mad at myself. All right. Yeah. So it's not this one. It's on Oanda. Yeah. See, we would already be almost probably taking profits on this thing. Yeah. The reason I put this up so high is because pound CAD trades with, sometimes it can trade with a lot of moving. But there you go. There you go. It's moving away from our entry. So at this point, seeing how it's 917, I would not want to get triggered in if it comes back up here, because then support will have held. And this is daily support. It's not the freshest daily support, but if we go look at it over here, you can see that this is a pretty damn big level, as price attempted to get above it many times. And look at this. Like, this was way up here and then closed under it and then rolled over. That was the first time you broke out, and this is the first time we came in for a retest. And upon testing it after 3 days, you got a nice 2-day bounce, but you're right back to it. So what does that tell me? That the momentum cannot be bullish. The bulls cannot get it to go. So that means that there's a lot more supply in this asset right now. So we look for sell side entries. If you are in the Discord and you took this trade, you need to take profits up here, because I posted this trade way before I came live. So this trade would have been taken had I not been going live today. And that would have made us 4 for 4, or me 4 for 4 on FX trades this week. The Aussie short, I traded twice. It's doing fantastic. Where are you at, Aussie dollar? Yeah, I shorted it right there at that white line the second time. And then it fell. Nice trade. It's still open. I have that open, and the USD JPY trade is still open. So we'll see how it goes. All right, what's everybody doing? Aussie dollar, please. All right, we're looking at it right now. You can see that now isn't the time to look for shorts, as you're into a daily demand zone. Now, all the indicators on this thing are going to say that it's bearish. So you do want to look for pullbacks, shorts, right? Where is that going to be? I have no clue. We don't really have, I mean, you could potentially look at that. I got the wrong thing for that. Got the wrong line. I want the array, please. There is the array. So maybe a test of that, right? Maybe the test of that. You could look for short entries, but you just can't short it where it is because of this beast right here. All right. You just can't. You're into a potential demand zone. I mean, it's not potential. It is a demand zone. It was where a lot of people took off and started buying the asset. That's why it left the area with a rapid quickness. So will buyers step back up here again? I doubt it. And the reason I doubt it is simple. This is looked at as a risk on, risk off asset. Whenever it's going down, or if it's bearish or whatnot, then risk assets usually follow pace, right? But this year has been one that's literally never happened before, where so many investors were wrong, right? So many of them were just wrong. The macro data said that we were going to make fresh lows, but everybody was just, they didn't know. So they either went into the short-term yields, or they just did buying cash, as we've seen a magnificent rally. Whenever you have a fresh yearly, man, or whoever, whenever you have a fresh yearly, you can take a chance at buying it or selling it, right? Just don't risk more than 1%. And if you're right, then you're going to be right for a while, probably. Now, obviously, if you wouldn't have got short on the yearly open here, you would have lost money, right? Clearly, because it went up, but then it broke back down. And for the majority of the year, it stayed bearish. And also, we had multiple attempts, one there, this one, and this one, to break and close above and stay above, right? Whenever I'm talking about stuff like this, I don't want to see this. I don't want to see a big breakout and then an instant pullback to the level, right? I want to see a breakout and then a small pullback and then maybe a smaller pullback and then go. That's called bullish momentum, something that this never had when it broke out above it. It had bullish momentum on this day and even the second day. I can't draw straight, but this is what I'd be looking for. That is where I'd have been going long. And boom, so many other people did. So many other people did go long there. I can tell because of this size of this candle, right? Once it got under that, see ya. It just took off. That is a long squeeze. And then you had a very small pullback and then boom. So it's not bullish. I mean, all the indicators are showing you that it's bearish, literally. And the asset itself is bearish. That is why I took the short right there. All right. The best part about it is when I took the short, this was retesting this also right there. These are the only indicators you need, ladies and gentlemen, are your moving averages from at least the 20 to the 200. I don't care if you, whatever, 21s or 55s or whatnot, 101s or 208s, whatever. Just, you need at least 4 of them. That gives you the idea of the macro trend. And then the RSI, just the simple, normal RSI. And get rid of that moving average because it doesn't do anything. I don't understand why anybody even would put one on it. I mean, this is a momentum indicator. That's all it is. You don't need a simple moving average trailing what an oscillator has done. This thing can only do one of 2 things, right? It either goes up or down, right? That's what it does. It oscillates with price, but it shows you the momentum. Shows you the momentum. So now that this thing came back in for a retest and took off, the short trade was up here. You can't short it now. You got to wait for a pullback. All right, when you get a pullback, then you can short it. But remember, this trades against the dollar. So if the dollar does ultimately roll over here at the monthly open, then that Aussie, it may get strength. But it's not the strongest of the currencies. And it hasn't been at all. So we can just simply look at the currency futures and see that. Swissy has been, in my opinion, the strongest currency this year. Oh, no, wait, it was the pound. It was the pound. I think the pound got a bigger move than this did. Let's check it. The Swissy got around an 8% move. The pound, a little better. So the pound did beat it just by like a day. 1 day range. But the yen, everybody knows, has been excruciatingly weak all year. Canadian dollar, it looked like it was going to be strong up in here, but then, I don't know, that's the multi-month. No, it's not. That's the area where we were looking for shorts. That's the area where I started warning people. Well, I didn't look for shorts, but, well, we did on Canadian Swissy, but because of that, right? So, but anyways, New Zealand, it's not even up on the year. Neither is Aussie. So New Zealand and Aussie is the weakest parent currencies out there, as Canadian, along with the Japanese yen. The Japanese yen is far weaker than any other currency. Far weaker, right? These are monthlies, so far weaker. All right. So we'll see how it goes, but I didn't really see any FX setups this morning other than pound CAD. It was the only one I saw that I liked. But if you have a setup, if you think you have a setup and you want to be sure, type it in the chat. Oh no, what did I just do? Type it in the chat. I'll go look at it for you. See, hourly support is holding currently. Yeah, don't know. All right, win 40K Bitcoin. Your guess is as good as mine, bro. Bitcoin is there's just no, which it's the summertime doldrums. Usually in the summertime, nothing really ever moves. It's all boring, very tiny, small ranges. Bitcoin just, I mean, you can clearly see that there's so much supply up here because this isn't the first time we try to get above it. We try to get above it over here. And then we fell. Then we got one other chance at it. And then we fell. Now, with that being said, this is not bearish price action. I mean, this price action looks to me like it's just pulling back. The problem is it's just pulling back forever. Right? I mean, look at how many days you broke down. This was a momentum candle. 1, 2, 3, 4 days before you got any real continuation. And then next days, you got nothing. And then this went up, took us out of our short position, which was there. And then you got momentous downside move. And then we're still in this area after 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. So, like, that's what Bitcoin's doing. I mean, you would need one hell of a piece of good news in order to get this thing going again. Clearly, it's still in an uptrend, right? But the near-term indicators say it is a sell. I told everybody that if we lose the 50, we're going to go down and test the 100. It's just as simple as that. And it did. It did exactly that. We'll go pull up the 100. Boom. So if we lost the 50, we're going down and test the 100. And I would say the same would be the case for if we lose the 100. You're more than likely going to come down and test the 200. Now, where that is when that happens, I don't know. But if we don't get some kind of demand in this asset soon, it is going to break down. And if the risk markets are topping, now I'm not saying that this is a top. Please do not go out there and say Trade Talk said that the market's topped and it's time to short. No, I'm not saying that. In fact, you're nowhere near where you could say that. This is just a pullback. You got so overbought and so extended on the weekly time frame that your 21 exponential is sloped straight up almost and is at $4,300. Right? You got to get under this on a weekly closing basis before you can consider it being bearish. But that's a big move to miss. So if you want to short it because you think the market is over and you think it's going back to test new lows, there was an opportunity. There will be another opportunity there, as that is the supply, right? That's the weekly Heath level. So if you get a retest of 45.37 spot 90 and it fails, then boom, you're going to want to go do that. So Etsy P&L on a day is $33. So $40 was the maximum that I could take, right? That was the maximum. That means if I hold it till expiration, what's Etsy doing right now? Intraday. Oh, that's why. So we're bouncing. But the reason is the VIX. If the VIX wasn't up, this would be at $40. So that is damn near, what is it? 75%? 75%? Are you good with 75% profits? I am. So, I mean, I can hold it and get 40. Well, it says P&L open is $40, so let's close it. Now let's go in and close it like this. Look, see that? I've got 100% profit. I sold this at 40 cents and it's zeros, even though the IV is still up so much. That's crazy. Anyways, Good stuff. There is no midpoint to sell on. There is no midpoint to sell on. It's 0. I can't do 0.5 of a penny. There we go. Filled. 100% profit on that trade. Beautiful. Beautiful. Who do we have for earnings today? Let's go get some earnings today, play. Do. All right, we don't want. Well, we definitely need dividend because there's dividend risk. We don't care about splits. We don't care about Econo Day event. We don't care about futures liquidation. We don't care about that. We don't care about that. All right, so before market, this is today. So these are all things that are going to have earnings this morning or already did have earnings. So we need to scroll down to the post market. Yeah, that's how many companies have earnings today. All right, here we are, post market right here. How do you know? Because I went from X to A. Aftermarket. See? So now all these are aftermarket. Oh, Apple. Apple's the big one today that everybody's looking for. A, B, and B. Let's go look at A, B, and B on the chart. Let's go look at it. A, B, and B. Airbnb. That looks rough on the week, man. But it's in an uptrend, and it's had a very significant pullback. So let's go check if there's any. See, now that it's Thursday, there might not be any. There might not be anything left in the premium to even look to sell. A, B, and B. We're at 106, 67%. So let's go open up. See, there's only 1 day to expiration. Go in the money. No, here we are, in the money. So what we need is we need to find something that is at least out of the 1 standard deviation move. That's all. I don't get the 1 standard deviation moves or nothing. It's got a $12 expected move. Let's go back into the chart. So that would be from the weekly open. Give me 1 second, guys. This is very important stuff here. We're setting up a potential trade. So far, I'm 2 for 2 on stock auctions this week. What did I say it was? A $12, $13 expected move? $12. All right, so we'll leave it at 13. And then we'll take this one. So 12 and 12 is 24, so we'll go to 25. All right. So we know that we need to either A, sell above the 170s or B, sell below the 130s. So then we go back in and we look at the 170s and see if there's any premium on them. No, I mean, there is a very small amount. This would be a good one to do because it's only got a 1% probability of touching. That means can price touch 170 with 1 day left to expiration? They say no. Well, yeah, out of 99 times or out of 100 times, it might do it once. Those are probabilities that you want on your side. So we could change this to probability in the money. Look at that. 2% probability of being in the money. Oh, those spreads are freaking wide. 162.50s. That puts you inside the expected move. You can't do that. Why? Obviously, there's more premium on it, but I like the sure thing plays. Like the sure thing plays. So I'm not going to do this on air, but what I usually do is I go to every single earnings and see how far this thing can move on an earnings break. See, I was more than 21% up on the AMD trade, and AMD has only moved up or down more than 20% twice in its entire life. So I felt the odds were good that it wouldn't see another 20% move, right? So that's what I did with that, and I'll probably do it with this. If I do this trade today, right? If I do it, I will post it on Twitter. All right. It's getting late on the week, so I probably won't take it because I have to go up in order to make the premium. Now, Heath, why can't you just go over here and sell, say, the 20 and try to get it at 26 and sell two of them? Well, you can. Maybe. What's the buying? No, I don't want to buy it. I want to sell it. Look, just selling this one out of the money call is going to require $4,265 of buying power. I don't have it. I don't have it. Open buying power. Oh, I do have it, just barely. So I can't sell one. And I would never do that. You never take your buying power down more than, say, 60%. Because buying power will fluctuate with your positions. If you're in a losing position, your buying power will go up and up and up. And that will cause you to get margined out. So I just can't take this trade, right? I just can't. Now, I do have some other trades open still, but like this one, this is a long dated call, right? I sold this thing. I've been holding it for 17 days, and it's literally got 57 days to go to expiration. I'm making $3, right? $3. That's nothing. Here's the rest of the positions that I have open, what they're making, right? Fubo's not making anything. Oxy's making -$4. UAL, which I put on yesterday, is $8. Then we got the XLF trade. It's up $16. That's P&L day. That's on the day. Here's the total P&L open. So the XLF trade is $27. UAL's got $7, and then the MES is $4.08. I'm losing $10 on Oxy, which was a iron condor right here. I need price to get up here or down here, either or, right? This is the put side. So obviously I need price to get down here to $57, or I need price to get up to $67. It's a $10 wide spread. So the percentages, profitability on this trade are not good. Here is the pop right here. So this trade was a 36% probable trade. And this one is a 33%. Why so low? Because they're directionally biased trades. Now, Oxy is a non-directional biased trade, but since the spread is so wide, it has a 36% probability of making 1 penny or more. And this one has a worse. But the 95% probability trades are the last two that I've taken are gone, and I made 100% profit on that. And then this trade is at 63%. And the only reason it's up to 63% is why? Because I'm in the money, right? I'm in the money. Here's the P&L right there. And I don't remember the max amount of money that I can make on that. I wonder if there is a max profit bar. P&L open with percent bar. Yeah, let's put it in there. Did I put it in there? Yeah, right there it is. So let's go look at it. P&L open with percent bar. So this isn't quite at $28. It's not even quite 50% profit. All right. So at 50% profit, I'll close it down because it has an expiration date. It's got 22 days left. At 22 days, this will be, well, one of them will be in the money because I have an in the money put. Here, I'll show you the trade. So I bought an in the money put. I sold an out of the money put to basically help finance the trade, if you will. So I had paid a debit, but it wasn't as big as a debit if I would have just went out there and bought the 36 put. So the max amount of money that I can make on this trade is the width of the spread minus the price that I paid. So what is the width of the spread? It's $2, right? $2. So the width of the spread equals, let me do this, $2. Now, That's not the max profit. The max profit is minus what I paid for the trade. What I paid for the trade. I don't remember what I paid for the trade. Let me see if I can find it in here. Trade price. All right, 73. So I paid $73. So $73. There you go. $2. Well, I paid 73 cents, but it's one contract, so that's $73. So that would be minus 73, right? So you take that, you got 7, you take that, but it's 9, you get 2, and you got 1. So 127 is the max I can make on the trade. 127 is the max I can make on the trade, and we're at 29 bucks. So what's half of 127? $63. So it's $63. That will be 50% of the max profit that I can make. And since we're getting closer and closer to expiration, and it is important because this is a long option strategy. It is very important. The closer and closer we get to expiration, like these two trades are probably going to lose money, right? They're probably going to lose money. So I will close it out before they lose a lot. I won't carry it all the way to expiration. There's no way. I expected the move to happen within the given time of the expiration. It didn't. So it's okay. This trade is up. It's up on the total P&L 0, but on the day it's up $4. This was down 7. So I'm not going to let this get all the way to a 1% loss. I'll just close them down if I don't think that it can do the move. I know all this option stuff for you that don't know options is pretty boring, but I mean, the trade, the P&L is up. The P&L, the total P&L on the P&L year to date is $181.63. All right, $181.63. That's not very much, right? This is a $5,000 account. That's over a 3% gain since I've opened the account. When did I open the account? 17 days ago. How do I know that? Because MES was the first trade I took. I had to see if I was able to sell options on futures. So in 17 days, I've turned this $5,000 account into a $5,182 account. As of now, right? Obviously, that'll change pending some of these losing trades that I got on. All right. But if you had $100,000, do the math, right? I'm looking at 1% of total account equity. So now, from now on, when I go out and sell, which won't be this week probably, because like I said, I'm not going to be able to find a $51 call to sell that's far enough out of the money for my liking. Because remember, selling calls has an infinite amount of risk. An infinite amount of risk. If whatever you sell and you sell it like 15% away from current price, and you wake up that next day and that stock has gapped up 50%, you are going to be hurting badly. Now, selling puts doesn't have a max loss. I mean, it doesn't have infinite loss, but it has a max loss because the asset can only go to 0. But it's still comparative, right? And I can show you what I mean by that. Just let me pull up a random asset here. What's a random asset? The SPY, that's a random asset. All right, so let's go out here and say we want to sell the 36 day. That gives us 36 days. And we think that the asset is going to be trading at $4, or wait, no, we're going to sell a put. All right, so we're going to sell a put way out of the money. This is one standard deviation. So we'll go 2 standard deviations out. We'll sell, review, and send. Look at the max loss. Right there. $39,913. This is only a $5,000 account. I can't afford that. So don't go out and start selling options if you know not what you are doing, please. Just watch the videos, and then if you need more help, you can come to the Discord because I am going to do these trades. They are going to be announced in the stocks room. So each trade I take, I am going to announce it. It will be, if you will, essentially a call. So yeah. I'm just looking for any. I'm in the stocks room, yes. Yeah, Etsy. So I called out the Etsy trade in the stock room, which most of you here are probably already in there. But you got to learn options, especially if you're in the US. You just got to, right? You have to. You can make more money trading options, and you can have defined risk plays. I can literally show you trades that have like an 89% chance of making money, right? You have defined risk, and you can do double, like 2-to-1 risk to reward. Like I can risk $30 to make 70 in some cases, and it'd be an 88% profitable or probability trade. You can't do that when you're just buying and selling futures, because you can never have more than a 50% chance of being right? With options, you can make your percentage of profitability much higher. And you can grow a small account. This is a small account that is being grown right in front of your eyes. So, yeah. Once it starts to get bigger and bigger, I will start, looking for higher and higher dollar cost trades. And then, you'll see a couple months, this thing it'll be cruising. It'll be cruising. All right. Any questions? Any thoughts on TLT? Yeah, let's go. Oh, wait, Brian has a question. Oh, wait, you want me to post that? All right. There we go. So here's what they got right now. The options bot, or algo, or AI, actually. GPT AI. These are strong buys. I haven't really actually played with it, but Brian is like almost nailing every single trade he takes. But he has a method. He's not just going out there and buying, say, AT&T, and I can't describe that method to you. So, yeah. But AT&T is a strong buy. 10-10. They want you to buy the deep in the money call, which would be $10. Let's pull up AT&T, and then I'll go look at TLT for you. No, not that. TLT. Oh, sorry. AT&T. I didn't see the strike. SEP 15, $10. So go out to the SEP 15s right there, 43 days out, and it wants you to buy the deep in the money call, which would be right there. So you'd pay $425 for it, which would be $425 of buying power. And if we pull up the chart, which is the reason I haven't really been playing around with it, is because it totally is against everything I'm about, right? Like, this to me is not a buy. It is not a buy. This thing is still bearish. Now, can it find a low and pull and start to go? Yeah, obviously it can. It can. But that call it wants you to buy is down here at $10. So if this thing keeps moving down, you're going to lose money. It needs to almost turn around immediately. He wrote VOD, VOD. Yeah, so something like this. You would buy deep in the money, and then you want to see the candle green intraday, right? Intraday, you want to see this thing start to go. But he only lets it get to where he's like made 1 or 2%, 3%, 4% profit, and then he bounces. He just gets out. Which, what I've seen on like the tests that I've done, most of them work best if you hold them like 15 to 20 days. But you will experience heat in some cases, and quite a bit. But ultimately, the algorithm is saying AT&T will be higher than $10 by expiration. VOD might be finding support here. There's no 2-week support. This candle's only 3 days old. It's a monthly. You got monthly support all the way down here. So there is a probability that this thing goes down to $9.02. I don't see any reason on the higher time frame levels why it would be pulling back from here. But we'll go into the, okay, so you got an old weekly support right there. Old weekly support. The new weekly support is here. So in my opinion, this thing could drop before it starts to go up. You don't have anything on the 3-day. You don't have anything on the daily. You're in the middle of the ranges. Like it needed to bounce from 923 and go. And it's not. So that's why it bounced there. You see how I did that? I went out in time and found the reason why it was bouncing. And it literally opened at that price. Literally. Old weekly support. So TLT. But that algo, like I said, every single play that I looked at, it might not have made money on the first 2, second, or even third day, but out 10, 15, 20 days, it started to make money. Every one I looked at. TLT's getting beat up. It's getting beat up today, this week. Just gapping massively down today. We're probably about to see some heavy selling. SPY is up on the day, but it's actually down because it's lower than yesterday's close. Yesterday's close is where it's down from. So, yeah, you might get to yesterday's close and roll over. Or you might get to yesterday's open and roll over. Yeah. Wait for a spike. We definitely don't want to sell while price is going lower, and especially while the VIX is going up, because the VIX going up makes premium more expensive. More expensive. Okay? So I don't like TLT. TLT is, if the risk markets are going to fall, TLT's going with them. I mean, TLT's doing worse than risk markets. That's just bad. Like, this thing's going to make a new low, probably. How far away is it from the low? 5% from the low. So what's the chance of it making a higher high or a higher low? The better odds would be to the lower. But it's still just a 50% chance. I mean, I don't know what it's going to do. It could stop anywhere in here. Like there. Or there. Because it's already past these two closes and opens. You're already under that. That's a very bad week. Would I buy this? Hell no. Hell no. Look at you on the weekly down here. That's a momentum oscillator on the weekly. You're oversold. Oversold does not mean buy it. Oversold is telling you that the direction is down. But you don't want to sell it when it's down here either, because of a chance of a bounce. You want to wait for the bounce, then sell. Where? Well, I would start with this price. If you bounce up to here, 97.04, that would be potentially a sell. But I would definitely need to see that area act as resistance intraday. Like, I would want to see it like gap up or whatever, and then intraday have not the ability to go higher. Then I would take that sell. But you can't sell it when it's in the midst of being oversold and still cruising lower. Yeah, we may see risk assets tumble, ladies and gentlemen. Getting downgraded is not good. It is not good. And the last time it happened, we went down 20%. If we go down 20% again, guess what? we're going to be at the lows. Close to the lows. So yeah, we'll see what happens. All right, all the perma bears are like finally maybe right. But they needed a downgrade for it to happen. I don't know that they're right either. This thing is still extraordinarily bullish. Very bullish. I think it's going to have a lot to do with whatever happens to Apple today. Oh. Whatever happens to Apple today at earnings. Let's go into TOS and look at Apple's earnings. Let's see how they're guiding. So $1.88 to $1.52. So if it's worse than $1.52 today, Apple's gonna get crushed tomorrow. It was going up 23 to 129. No, that's the dividend. Can we get rid of dividends? And I can't go no further. Let me do this. Let's go. I guess I gotta make a new one. We want 5 years day. Boom. There you go. So we don't need all that. But you can just look 124, $2, 152. So it got sold off because it was lower than 2.1, and then it was lower than 2.1, 1.52, but it actually gapped up, so it doesn't always work. 129, 188, 152. So it just depends on what happens with Apple today. Do they come in higher than 152? If not, seeing how it's already pulling back, you might see a deeper correction on Apple. And Apple holds a very big portion of the S&P 500 as well as the NASDAQ. This is a bullish trade. This is one that I have on right now. So I don't understand why it's not making money. It's making $7 on a day, but $3 total. $2. All right. Anyway, all right. So we looked at TLT. How can the dollar still be bullish with all this printing and low credit scores? Your guess is as good as mine, Philip. I think that a lot of people are probably going back to the dollar since the downgrade because they know the dollar as of right now is still, the world reserve currency. And if they fear the markets, which we know they do because of the skew. The skew tells us that even though everybody's long, they are hedging their asses off. Otherwise, the skew would be low, right? If they weren't hedging, it would just be a free-for-all bull market. But they are hedged. Thanks for your tips on silver. I bought too soon, targeting 28, but is patience the game now, or is it time to say, spaghetti-o? If you're in a loss, you close it. All right? You always close it. You never risk more than 1% on any given trade. Ever. The reason is to keep you out of trouble. It's to keep you out of trouble. You bought targeting 28. You didn't tell me where you bought. And 28 is monthly res. So it's okay, but I mean, where did you buy? If you bought anywhere above where you are now, sell it, get out. I mean, trading isn't about being right. Okay, trading is about managing risk. If you can't manage risk, no matter how many times you're correct, you're still going to lose money, right? You got to be consistent in the way that you apply trades. If you're taking trades, you're risking 1% on every single trade, no matter what, right? And then ultimately, over time, once you get it, the strategy, once you understand what you're looking for, once you know everything that you're looking for, then you take a trade. And if you're wrong, you lose 1%. That's it. And then you move on, you wait. This thing was testing support, but it busted right freaking through it. Right through it. That is your yearly opening range on silver. That is 2023. It looks weak. Here's where the open is. It made a deep low and a not so deep high. It made a lower, like this move to the downside is bigger than this move to the upside. And now what have you done? Well, you did finally make a higher high. So is this going to be a new higher low, higher high sequence? Well, it needs to find support before this. So maybe here it finds support. I don't know if it will, but that's where I'd look for support to start at least. Right there. That's your last or lowest closing bearish candle to where you are, right? Obviously, this is lower, and this is lower, but this is the closest bearish candle to where price is currently trading. So that's the one you look for support first. But remember, you don't just randomly buy as soon as price hits that, because if you would have done it here, you're now losing. It didn't hold a support. It blasted right through it. So 2314 is the next area to look for support. If it builds in support here, which is possible because you are trading at the midpoint of this candle. So if this candle closes like this or higher today, then watch the next few days. See if it actually gets some bullish momentum. But this thing is telling you it is not a buy, right? It was a buy here, but look what happened. You made a lower high. So if you would have bought that, you should have taken profits, obviously, because you were coming into supply and resistance. And boom, down she goes. This thing is telling you that momentum is bearish. Now, you can never see into the future. That's the problem with trading. Everybody wants that strategy that tells them, is now the time to buy? Is now the time to sell? We don't know, right? We don't know. We have to watch and see if price will build in support here. Have to see if it will. Very next candle, it looks like it's trying to build support, but does that look like bullish momentum? No, it doesn't. And look at the little lift there. Next candle. Okay, so now it looks good. So any retest of this candle's close, will be a buying opportunity moving forward. Because the indicator says so. Come on, would you please work? Thank you. So right there, right? That's where everybody was looking to buy. Where did it go? Oh, there. Boom. And it even held, right? It even held. It closed above, tagged it, closed above, but unfortunately, boom. I mean, simple technical analysis would have told you that you need to be up here and then look for a pullback. You did take out this high, so you could have looked for pullback trades. The problem is you maybe would have made money. I don't know, depending on your entry, depending on your take profit, all that. But you could have made money on that trade. But you're still it's still just a lower high. It's higher than this high. So the question is now on silver, do we find support and do we take out this high? If so, then you can start looking for pullback buys. When you're trying to buy something like this, you're literally trying to pick the floor or the bottom. When in reality, this is a $2 range. All of this is a $2 range. Now, I know if you're trading it if you're trading it on a broker that allows you to trade this like Forex, you're probably going in with everything you got, max leverage, which is probably 50x if you're in America. If you're not in America, it could go as high as 100x leverage. And then you have to have very small, tight stop losses. So you got to be right. And this is just something to me that I don't like a bull flag. They should have left here. This is not a bull flag anymore. A, you're below the yearly opening range. B, you're below the 50 on that. And C, you're below the 21 and the 50. So where it should have held support, here. And it's literally breaking down today. Now, could this be a bear trap? Absolutely it can. Absolutely it can. So what you do is you don't buy it now. You wait until price closes back above this support. Then you look for bullish entries because that will show you that that was a bear trap. Now, technically, I would say you would want to wait until at least the high of this candle is taken out before looking for pullback entries. Because once the high is taken out, then game, set, match. All these shorts are now stuck, right? But we'll see. I mean, this is because the dollar is still going up. Today, it's actually struggling a bit, but silver just has inherent weakness compared to the dollar. All right. Don't do that. If you're setting in a losing trade, close it. Close it. It's so simple. All you got to do is hit exit. Yeah. So close them. Close them down, guys. If you're losing money, do not hold the trade open. That's the whole the purpose of being in a trade is to be positive, not negative. And if you're negative and hoping for it to come back, that's the worst place to be. It's the worst place to be. And I'll show you why real quick. All right. So you bought here, right? And then all of this because it's support, because Trade Talk says it's support, and it's above the 21, and it's above the 50, and it's above the 50 on the RSI. So this is a buy. Boom. I buy 102.90, 102 spot 92. But what happens? Intraday, you take off to the downside, but you didn't have a stop loss. And now you're losing so much money. You're like, oh my God, it's going to bounce. It's going to bounce, and I'll be able to at least get out with just maybe a 12 or 13% loss, hopefully, if it gets back up to my entry, right? That's what you're hoping. And in here, you're already setting in a significant loss, setting in a significant loss, praying to any God that'll listen that you get a pullback. Boom. Boom. That's the puke point there. That's the, oh shit, that's the margin call, right? All because you couldn't take a loss. If you cannot take a loss, this is not for you. Trading is not for you. This trading account right here, do not have a 100% hit rate on this trade. Out of every trade that I have opened and closed, one of them was a loser. All right, EMPH. It was a loser. So we'll go check it out. EMPH. I needed prices to stay above 145 at expiration, which is this green line, to make money. All right. It was a bullish put spread. So I don't necessarily need price to go up. I just needed to stay above 145 all the way to expiration. And then we had earnings, which is I only sell way out of the money calls if it's right. And I'll teach you how to do that. But you can't just go do it now. Like today. Oh, sell a call. Boom. You got to know what not expiration, but you got to know a lot more stuff. You got to know what delta you're using. You got to know, are you inside the 68% or what? Like, are you inside the expected move? There's so much stuff. So don't just go out there and sell calls today, especially because there's today and tomorrow and that's it. So you're not going to get as much premium anyways. All right. Anyways, this happened. Boom. It came all the way down. It came down to like 136 pre-market. So had the market opened, I would have been at a loss of like way more than I wanted to lose. Remember, 1% is all I want to lose on the account. So on this day, it opens higher, comes down, retests it, and then goes higher. At the end of the day, this day, I was down 1.5% on total account equity. And I said, I am closing it. I told myself, if it gets above and closes above this, A, I won't be in a loss anymore, and B, I'll be safe. But it didn't. It didn't even come close. So like 15 minutes to the bell, I closed the position for a 1.5% loss. 1.5% loss. And the P&L year to date on that account is $182. That doesn't sound like a lot of money. It's not. Guess what? If you have $5,000 and that's all you have, you're not going to be able to make enough money to make a living on $5,000. The point is to teach you how to build an account slowly over time. Because once you do that, A, you can either go get funded, or B, you can just wait until your account gets big enough to where you can make whatever you need to live on a weekly basis, potentially, right? Potentially, because we never know if we're going to make money or lose money when we take the trades. We only have probabilities. So with this, the probabilities were not looking good. I was down on a trade, and I was like, you know what? I'm going to close it because I don't want it to pull back because it looks so weak. And if I wouldn't have done that, guess what? I'd be sitting in a huge loss, a lot more than 1.5%. The total loss on that trade was $400. That's 8% of the total account equity. That means I'd have to make 16% just to get back to break even. Guys, when you're setting it, don't set in losses, please. In options, that's different. It is, because you got expirations involved and other things. But if you're trading spot or Forex or crypto futures, you know what I mean, where you get long or short based on whatever price is, don't take up more than a 1 or 2% loss ever on any trade. Because guess what? There's always another trade to take tomorrow, and the next day, and the next day, and the next day. Every day there's an opportunity. Look at this. We probably would have had to take profits, or, oof, see, I closed that out. I'm glad I did, because I got filled. And now it doesn't look good, does it? Don't ever short into support. But it looked good. But it would have made money, right? If you took the trade up here and took profits right here as support, you would have made money. And it still might roll back over. I mean, I don't know. But anyways, don't hold losing trades. What do you see on gold? It's the same as silver. I mean, gold's at highs. Like, it's at highs. See there? This is an all-time high on gold. Was an all-time high on gold. Or still is an all-time high on gold. So you're trading at all-time highs. If the market takes a dump, gold will too. All right, gold will too. So here's the March 2020 candle. I mean, it dumped, but it wasn't as significant as the market was. Well, you have to go all the way to the low. So you dumped 15%, 2002. Here's your 2008 bear market. So gold isn't like, how do you say, it's not as safe as people think. I mean, it will get killed in the event that everything else is getting killed. But yeah, gold is at all-time highs. I mean, you're not far from making all-time highs. So I mean, if you're buying it for that, right? And that's just a 7% move to get to all-time highs. Now, gold moves very slowly. It's like Forex. It is one of the most liquid markets in the world. It's just, as of right now, it looks like a sell, right? I'd be looking for short entries on gold. Like this one, I would have potentially taken when it moved up above support. I'd have been looking for shorts in here. And then today I'd be in profits. So it's not a long, if that's what you're asking. long term, I think gold could do good if the dollar would fall, right? Because this is traded versus the dollar, but it's also a lot of stuff goes on with gold, right? It's not just like, I mean, there's a lot. This has a huge market cap, trillions of dollars. So, do I think gold will go higher eventually? Yeah, I do, because it is a rare earth metal and people wear it for jewelry and it's used in computers and stuff like that. So, I mean, it doesn't have a huge use case other than being potential money. Or can I take a gold bar, knock a chip off, and get a gallon of milk from my pal down the street once, the US dollar no longer works? Probably not. Why? Because the gold isn't worth anything anymore. Because the dollar isn't. So there's no way to put a value on gold at that point. But overall, as long as the world sustains and everything moves on for the good, then yeah, gold will probably break that all-time high soon. But I know a lot of people there's traders that only trade gold. And I know a couple traders that only trade oil. They don't trade anything else. Gold, oil. Because they're both liquid when they're trading futures. And you need liquid markets for futures trading, but it's got to find support. All right. And the next support that I see here, just off the cuff, would be like right there. So, but at that point, would I be a buyer? I don't know. I mean, it does look like it's trying to break out, but it just lost all of its momentum. So it needs to hold support here. If it gets under here, you're going to make this low. You're going to take this low out. You'll take that out if you don't hold up in here. All right. Can you look at coin earnings? Yeah. They got earnings today, tomorrow, today. Coins got earnings. Are we going to trade it? Love the IV. There's a 1%. No, sorry. That's one standard deviation. Yes. Oh my God, look at all the way out to the 2 standard deviation. This thing is priced to move $8. Let's see, where is it now? $8 would put you right there at the 100 mark. They're in a lawsuit right now, so what's the chance that they're going to beat earnings? Let's go see. 305, 642, 162, negative 198, negative 498, negative 243, negative 246, negative 34. So if they beat a negative 34, they come out with a negative 32, for instance, it might move up. So yeah, I like this trade. It's got a lot of extrinsic value down here. So what was I looking at? 107s? 107. That's well above the expected move. Can we get above the high? 115. What does it look like at 115s? Not good. Let's try to. So we got what? All right, 51. As the account's got $5,100 in it. And there's a 2% chance that this strike will be in the money at expiration. So that makes this trade a 92% probability. I don't know why, but anyways. Buying power effect, 28.79. Can we take this trade? Yes. Do we want to take it at 51 cents? No. Why? Because, oh shit, now it's more, it's less. So it's got a wide bid-ask spread. This is not liquid. 51 would be the midpoint. Let's see if we can get filled at. Yeah. Nah, let's not be cute. 52. Send order. I'll close those other trades out if it fills. That's the 108. I meant to do the 107, but that's good. That's okay. A 108 puts us a little bit further away. The further away you are, the better. I mean, that means price has to stay under. Shit. What is that? Right there. That's where price. Go away. Price has to stay under this by Friday evening. Otherwise, you lose money. All right. Will I get filled? Probably not. Why? Because I'm trying to get filled at the ask. Trying to get filled at the ask. You could go up one strike, but the delta's no good. The delta's really no good here. This would be the better selection. Right in here. Oh, too late. I got filled. Well, damn it. I was about to change my mind and go down to the 110. Oh, well. Or go up to the 110. All right. So that's done. That's a coin trade. And we're betting that coin will not get above or at 108. Can it? Yeah, it can. But it has to be earnings. Like, it has to come in like at $1 or something. If they come in negative, then no. Do you think they've made money this year? Yeah. Prices went up. This is actually a pretty risky trade here. Actually, it's very risky. So we'll watch that. But it's coming up nicely to the 21 exponential, so we'll see if they start selling it here. So beautiful fill. See, this option won't start making money until price starts to trade down. Okay? But by expiration, it can go up. It can go all the way up to 106, 107. But Friday at the close, it has to be at 108 or higher for me to lose money. At the expiration. It will lose money if it just goes up and up and up, right? It will lose money. But if it's down below 108 by expiration, it'll make $51. I think that's what we got. What we got filled for what? 51 or 52? I think I said don't get cute. 51. We got filled at 52. We literally got filled on the ask on that. Now the ask is 55. So nice. Good fill. Love it. Love it. All right. Let me answer some of these questions. So we gotta go. We gotta go. Ready to break out. Tell. I don't know. What is tell? And even if it is, I mean, it looks okay, but you rejected the yearly opening range. But yeah, I mean, it still looks okay. The last time we looked at this, I said look for entries around 149, 139. Unfortunately, this was your only chance to get that. And you wouldn't have probably because it didn't touch the level, but that would have been close enough for me. Yeah, it looks like it is trying to. The yearly opening range here, not looking so good. As soon as you closed above it, you got rejected. So just be careful. Would I buy it now? Absolutely not. No way. 149, 139 was the place to buy this. And we did that before price got over here. So, but now you can't because you're in the process of already moving up. If you buy it here, you take the chance on yesterday's close open being resistance and it rolling back over and taking a loss. It's already on the move, but after rejection. It's not a heavy rejection either. So you're right. I think you're right. I think this will ultimately end up getting above 174. Maybe. It's got to get bullish momentum above the yearly opening range. It just has to. Yeah, we took that coin trade. Bravo. Tomorrow I'll let you know how it's going. Because we do have non-farm payrolls tomorrow. Good morning, Euro USD short at. All right, let's go look at Euro USD. All right. So you are short at 109.398. So right in here. Yeah. This is last month's open. That's why it's rejecting here. That's a big level. Just took profit at 109.234. Nice. Well, good job. I mean, yeah. Good job. I, however, would not have taken that trade. I would be looking for a retest of this to hold as resistance and then look for this as the target. But good job. Good stuff. I mean, it has downside continuation. So, yeah, I expect this candle to close. Well, we'll see. We'll see how it goes. I mean, depending on how much buying was going on there, if there was a lot of buying going on there, let's go see. No. Shit. That's okay. We don't need it. I can put it right back. See where the volume point of control is? It's right at the open. What does that tell you? A, it tells me you were right to short it. Clearly, there's more selling going on than buying. The blue's the buying, the yellow's the selling. So, yeah, it's just this is it's also Q3 open. So not only is it last month's open, it's Q3 open. Big resistance support level there. Big support level. This is the area where I'd be looking for shorts. Notice how that wick went right up there to old hourly support right there, even though it had already been tested once. I mean, it was perfect. But I like the dailies better. So good stuff on that. Any thoughts? Leave it alone. Because since so many people have sold at the bottom, you can see that there's not much buying going on down here compared to how much selling. So what that means is since so many people are caught short under here at support, this is probably going to rock and roll to the upside. Once all these shorts from here down, and it's more shorts than bids, once all of these get stopped out, you're probably going to move up. I wouldn't doubt it if you retested yesterday's point of control. I mean, but we got daily support right there. So that's where we will look for shorts if it gets up there and if it acts as resistance. I wouldn't do anything with it today. You almost got a bullish engulfing there on that hourly. Square has earnings too. Yeah, I already took a trade. My buying power is crushed. I can't take any more. But we will look at it. Oh my God, Square's been getting killed the last couple days. Why? The market expects that they're going to miss, obviously. Obviously, the market. Oh, that's an hourly. Jesus. What's wrong with you? Get on the right time frame. Still looks terrible. I mean, that's a straight drop off for the last 3 days. Boom, 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 boom. If you look over here, I mean, everything's red. Red, 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 red. Oh, Square didn't really get a good bounce off the yearly open. And then as soon as it did kind of get a good bounce from 66 up to 90, or 88. Not bad. 89, not bad. Took profits, obviously, hopefully. because then it dropped back down, became bearish on the year, and then we got this move. So is this a pullback or what? I don't know. I don't know. It made a lower high than its previous yearly high. So is it going down and trying to make a fresh yearly low? We'll find out. Let's look at Square as far as if anybody else wants to take the trade. Remember, I can't. I got too much already. My buying power used up. So SQ, we'll go see if it's even worth. Well, you're good up here. You got plenty of implied volatility. Right here's your first standard deviation move. One standard deviation move. If you watch my video, then you know that the market stays within this part here 68% of the time. So that means if you sell any of these, you have a very, very not so good chance of making money. Even though that's where all the good premiums are. Now you could take a vertical spread, like you could sell the 75 and buy the 78, right? Then you would have $3 of risk minus the price of the spread, or I mean the premium. If it's a bearish spread, you'd be selling the 75, buying the 78. It'd be a $3 wide spread. And you would receive a credit of whatever, but your mask risk would be $300 because that's the width of the spread. It's just a safer way to do it. No, I do not want to buy that. Thank you very much. But what I see for the strategy that I use, this is not a good one to take for me. The simple reason is I don't like to sell higher than a 10 delta, and you can see right here is the 10 delta during earnings. I don't like to sell anything higher than a 10 delta. My sweet spot is 9 to 6. And from 9 to 6 is right here. You can see the premium that we would get potentially is only this. And then this is your second standard deviation move. It's nice when you can get your deltas at 9 down in here. Right? Or 10 down in here. Does it happen often? Not really. But I mean, that's a big move. That's the expected move right there. $5. $5.17. This is for anybody that wants to take the trade. If you got a small account, like $2,000, I would jump right in here and take this baby right there. But I wouldn't sell it for 19. I'd try it. Well, you got to, because it's got a very tight spread. So if you got a $2,000 account, you could sell that one. And it's got a 1% probability of getting in the money before expiration. But make sure you buy it back before expiration, or you could get assignment risk. Always get out of the position before expiration. All right. So that's what you could do if you had a small account. For my account, I would need to get up in here, and that's a 16 delta. Still has a low percent chance of getting hit based on this move, because here's in the money. $72 is in the money. So 1, 2, 3, 4, 5. We'll just say that. That's what the market expects is going to happen. I don't like being just 2 strikes away from what the market expects is going to happen. I like being 10 strikes away from what the market expects is going to happen. Right? I like to be far away. I don't want to go to bed sweating. Right? I want to go to bed comfortable. I mean, like that trade I just took, like it had a 2% probability of being in the money at expiration. So you could take this one, but I would take this one. But I can't take it because that's the problem with selling options when you got a small account. Literally one position is going to require most of your buying power, if not all of it. But I'll teach you how to make money. Not just selling options. I don't just sell options. The reason I'm selling these options out of the money is because the premiums are fantastic. And that's literally what I'm doing, right? I'm selling the out of the money call, trying to collect all that premium. You would collect more premium by selling the puts. Let's go see. We said what? We want under a 9 delta. So at the 7 delta on the put side, you could do 20 to 24 potentially. On the 7 delta over here. Oh shit, won't let me scroll. You don't have a 7 delta, but at the 8 delta. So there is a little bit more money in the put. Not this 231. That's not it. It's the 7 delta. We don't have it. So we got a 6 delta here trading at, we'll call it 19 cents. Here's a 6 delta trading at 17 cents. So there's actually more premium in the call side, which is why the skew's messed up, right? See, look, just all you got to do is just look at, man, that pin just did that all by itself. I did not touch that. But you could just look right here and see, right? 287, 292s, 280, 285s. So there's more premium in the call side. The reason you can do that is because you're above $72. So, yeah. No, I don't like it. I don't like it for my account. But if you got a small account, yep. All right. Good morning, fam. At 100 shares, the Tesla would cover calls options. Wait, would cover call options play be worth learning? Yeah. Yeah, it would. I haven't gotten to any, I haven't made any strategy videos yet, but the next video that's coming out is going to be a simple strategy. But yeah, I mean, you could buy some covered call or sell some covered calls because you already own 100 shares. What are you looking to do though? Like, so covered call essentially just means you have the shares. So what people will do is they'll go way out in the money like this and collect a premium on it, on those shares, right? Like they'll go out there and they'll sell the 325 call and just at expiration take the premiums, right? Because they already own the shares. Yeah, you can do that for sure. 50 days out, I'd go. Well, you can't go no lower than 11 delta. That's literally the only strike this has. This is all strikes are open. So 325 is the lowest you could go. Look at that bid-ass spread, though. Jesus. $1.12 to 310. These options are not. Yeah. There's zero open interest in these. You don't really want to sell illiquid options, guys, because it's hard to get out of them. So, like, for instance, if I said, the market is open, for God's sake. Look at that. I would definitely do this one instead of that one because the spread on this one is $164 ask. So I would literally, like, what's the midpoint on this one? Why won't it just let me? There we go. Midpoint, 210. I would go up higher and just see if I could get filled. Like, I'd go, like, to 250. Because what happens is you have to get out of the position. You have to get out of the position. This has zero open interest in it. 25 people have, I guess, partaked on that exact strike, but Yeah, I don't know. I do not like that wide bid-ask spread. That is a fact. If you're going to sell options, it's better to sell options on a liquid product. Tesla is liquid, but its options are not. But these options are way out, right? 50 days. So let's go closer. But I mean, that's the whole point on covered calls, is just to collect premium on the shares you own. It's a way to make money, and you don't have to worry about assignment risk because you've already got the shares. But yeah, anyways, 22 days out. Something's wrong with this. That's because the strikes move on me. Yeah, these are in the money. These are out of the money. Jesus, I was looking at in the monies. Who changed my strikes around? There. That's better. I was looking in the money. My bad. I accidentally changed my strikes around. Let me go back out where we were. 50 days. This is in the money out here. Yeah, no. Yeah, we were looking at out of the money strike. Yeah. So you can see the closer days have more a better bid-ask spread. These far away out ones, they don't have liquidity yet. But it changes that quick. This is out of the money on the call side. The bid-ask spreads are tighter. See that? 210, 212, 29, 211, 78, 81. You're right. So nobody's making a market out there yet on Tesla 50 days out. That's weird. Why is nobody making a market on options on 50 days out? On Tesla. The closer you go, the more, obviously, the more it is. So yeah, if you want to do that, you could do that on 15 days. These things it keeps changing it on me on its own. Yeah, you can go out here to the tens and you could collect $1.13, 50 days out, and then do it again next time. Just keep doing it. Boom, 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 and you can collect a premium. The question is, will your broker allow you to do it? Right? If I wanted to sell one of these, it would take almost $10,000 of buying power. Why? Because Tesla moves so much. Look at these strikes. These strikes are 250 wide, two halves. Tesla moves like a mamma jammer, so I couldn't even sell a Tesla call with my P&L. So yeah, if you got the money in the account, do it. Yes, sir, always. Because you got high implied vols right now. See, like your implied volatility is not high on Tesla, 48. I mean, it is high, but you can buy options under 50 because there's not that much implied volatility. But like if you got like 60s and 70s, yes, collect premium on your shares. Why not? It's like, yeah, man, make money. Make money. That's what you're trying to do, right? Just watch my videos, and once we get into the covered calls stuff, I'll go over everything you need to know about it, because there's more things to know, but I'm trying to get off the live stream because everybody's left, or a lot of people's left. ISM at 10. Yep. ISM, it's already happened. Thanks, brother. Help for advice, Silver. Welcome. Hello, everyone. Is it difficult to get funded in the USA? I'm just curious. Funded in the USA? I don't know what do you mean? On a specific platform? Maybe. Are you in the US? If you're in the US, then you shouldn't have any trouble. Oh, getting funded. I got you. I see what you're saying. I don't know of any prop firms offhand. FTMA's one I think everybody's doing, Fatma or whatever. I don't know what it's called, but you can try them, but I think they charge you money, which isn't the way it's supposed to go. A real prop firm isn't going to charge you money. They're just going to give you money. But you got to have paperwork that shows that you are profitable over time. Like 2 years of profitability, you could get funded easily. But there are prop firms out there, they don't give a shit if you're profitable or not. They'll take your money, right? Costs $500 to get $10,000 of buying power. They'll take your money and they don't care if you lose it or not, because it's not real money. It's not real money. Let me see here. So that's what they're doing right there. The guys that offer you, that you have to pay to get money, they're not actually entering your positions into the open market. It's a CFD. They're holding the position. They don't actually open it. On their platform, it'll look like you're filled, but in real life, you are not filled when you're trading CFD. That's why it's illegal in the USA to trade CFDs, because you're not actually getting filled in the open market. You're getting filled on their platform, but their platform isn't doing anything. Like if you start winning a lot, then maybe they take a position or something. They got a strategy, obviously, to hedge their risks and everything, but they'll take your money for sure. I think the FTMA, there's like tests and stuff you have to go through, but there are other ones that you could just do a Google search and just pay to get in, and they'll give you like 24 grand or something. I don't know if the one prop firm I'm thinking of still exists. I don't know if they're still in business or not, but if they are, like if you're thinking about trading penny stocks or anything like that, you can't do that on their platform. I mean, only some of them, not the good ones. Like, yeah, I don't know. Get funded. I would look for the ones that literally pay you, right? Not the other way around. If you have to pay them to get funded, they are already betting on you to lose, and they just want your money. Right? But I don't know anything about prop firms because I didn't go that route. I didn't have to. TFT is good. Yeah, so there you go. All right, everybody. Thank you guys so much for your time. This went way longer than I intended it to go, but hopefully something was learned from this. Anyways, make sure you guys trade safe. We will go live tomorrow morning at 8:15ish because NFP comes out at 8:30, and we'll keep it short and sweet. And that'll be the last stream of the week. Thank you all for being here. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.